Are you sending money from the US to your family back home? A new remittance tax could cut into your hard-earned dollars. Let's break it down. The Trump administration has proposed a remittance tax of 5% on all money sent abroad by non-citizens. It's part of a new bill called the One Big Beautiful Bill, and there's another called the Wired Act that proposes a 10% tax to fund border security. With over $160 billion sent out of the US last year, this tax could hurt millions. In fact, Mexico has already seen a 12% drop in remittances, the steepest in over a decade. Critics call it double taxation, because immigrants already pay income tax in the US. Worse, it may push people to use unsafe, informal money transfer routes, raising the risks of fraud. Now let's bring this closer to home with a real-life example. Meet Raj, a hardworking engineer living in Texas. Like many immigrants, Raj sends money back home every month, in his case, $1,000 to support his elderly parents in India. This money goes towards essential expenses, groceries, electricity, and medical bills. Every dollar matters. But under the proposed 5% remittance tax, Raj wouldn't be sending $1,000 anymore, not really. The US government would take $50 as tax before the money even leaves the country. That means his parents would receive only $950. It may not sound like much to some, but in countries like India, that $50 can cover an entire month's worth of medicines or utility bills. Now let's imagine the second proposal becomes law, the one under the Wired Act, with a 10% tax. In that case, Raj loses $100 on every transfer. His parents would get just $900. That's $1,200 lost, not in fees or currency conversion, just in taxes, on money that Raj already paid income tax on. This is where the real issue lies, double taxation. Raj earns, pays taxes in the US, and now he's taxed again just for helping his family survive back home. It feels less like a remittance and more like a penalty for being responsible. And Raj's story isn't rare, it's the reality for millions of immigrants sending money to loved ones in India, the Philippines, Nigeria, Mexico, and beyond. This tax could change how families budget, how students pay fees, or how elderly parents afford healthcare. What's your take? Smart revenue move or a burden on global families? Comment below, and don't forget to follow Finance Harbor for clear, quick updates on how global finance impacts you.